Good morning, everybody. Hi, Shahab. Everyone doing okay? Money, Coach, Didier, Jeffrey, Amira, Ren, how are you? Brock, Alexandra. This is for you, Amira. If I were a rich man, yava viva viva va 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 viva viva bum. All day long I'd pity pity pum. Yidle diddle deedle diddle dum. Hugo, Juan, you like that, Amira? Little fiddler on the roof while the building while the building is burning down. Okay, so starting off with the dollar, we're threatening a trend break. Don't worry, Jeffrey, I won't. I pay to sing. When I go out and sing, I have to pay for appetizers and drinks and all of that. You know, this was a Mark Newton line that he showed before he got interrupted. To me, looks like we're coming out of the channel now. I bought the bottom and got out here, and this was bothering me, right? So sometimes my edge, oh, it's not boring. How could this be boring? Yeah. So anyway, this bothered me. So, you know, I was looking for one more low. Not anymore. Okay, so this is a pretty good look. Yeah. But you see, if sometimes it usually works. So it didn't work here, but you know what bothered me in the yen, this confirmed low worked. See, the yen broke to new lows. Now it's diverging. So actually putting in a nice little candle here. So, you know, we may get bounces from here. S&Ps, you know, at an important level. Book crude shorts, gold's breaking down. I don't know how, you know, anyone could really say this is boring. There's crude. All right. So every rip worked out here. I think we're going to 36, but we could get some type of reversal here off the S&Ps on some short term. Yeah, it's not boring. And yeah, gold's breaking down right at major support, 1890. Silver's twice as weak. So you know, there are many ways to express a strong dollar. You know how? Being short almost everything, right? Short gold, short oil, short S&Ps, right? You didn't have to be long the dollar. You could have been short anything. And this I showed yesterday. I'm actually BE now. I think this is the last domino to perhaps fall, and this is Bitcoin. You know, it's not ideal, this divergence here or here, but it's not bad. We start taking out this level 13.3. I think we could get a pretty good break. So actually, you have to hand it to crypto. It's actually an asset class that so far is holding up better than almost everything else. But I think we're going to get a correction back to maybe, I don't know, 10,000, 11,000. We'll see. So, and may I say this one more time? And I said yesterday was important because of what the VIX did, right? Look at this. So you had a breakaway gap, and now you have another gap, a runaway gap. So anyone who bought these or November 30 calls are, you know, 7 points in the money. I know you went through some option decay during this period because you lost some time, about a month or so. So we're challenging these highs here. So I felt that yesterday's action in Monday's action in the VIX was significant, and it turns out it is. So tough to, ignore what's going on here with a gap to break out and then another gap. So there are different gaps. A lot of FX traders don't know about the different type of gaps. There are things called area gaps. Those are just very common gaps, and they could be filled quite frequently. But if you're waiting for this gap to be filled in the VIX, don't sell volatility because it left a gap and it's going to fill a gap. And who knows if we're even going to fill this gap. So you have a common gap, you have a breakaway gap, you have a runaway gap, and then the last gap, if we get one more gap, could be measured, could be labeled an exhaustion gap. Did you guys know they're all different labels for gaps? So when markets used to open and close, till the next day, you had more gaps to contend with. So I think that's about it. Oil, Greg had tipped all of us off to this in the oil, and Steve was open to this type of scenario. I think we're going to 36, but sell every rip. Okay. Gold, this 1890 level, look out if we take that out. And so, all right. Yeah, so, okay, we have this going on here. And I don't know if we're going to have a big flight to quality. This bounce in yields hasn't been fantastic. So I kind of have this feeling, guys, if you've made money being short things that have been declining into Wednesday, if you don't get out of everything, I would book half and tighten up stops just in case we get some type of reaction going into the weekend. Okay. And if you've been short a lot of things, you've already had a good week and it's Wednesday. Nothing wrong with having a good week before the week is done. Only another couple trading days left. So, now manage your profits. Don't say it's the house's money. It's your money. It's your money. It was. Yeah. Okay. I mean, I think Microsoft really gave up the ghost. And I'm just going to go over a few of the fangs. We'll see what happens here. But Apple held up okay yesterday. I think there's some more earnings. But Microsoft still looks heavy to me. Google probably isn't going to have a great day. Amazon's well under its secondary high. And Facebook is still playing with the 61.8 level. So we'll see what happens. And I think that's about it. Oh yeah. So on this risk off event, something to keep in mind. So we are looking for a place to buy the grains. Look at this 3 drive in beans. It's probably a short, but for a position trader, maybe now, if the dollar continues to squeeze, we get a pullback to $9 beans, buy them. We get a pullback to 360, 350 corn, buy them. We get a pullback in wheat to 560 or so, 540, buy them. So that's what I have to say this morning. We have Dave from Moneyology at the top of the hour, and Blake, how you doing, buddy? Does this look like we're on the verge of a breakout in the dollar on your technical work?
Yeah, I mean, we're going to take a look at the dollar. I was long the dollar overnight. I was long the Canadian, short the euro,
Nice.
long the dollar mex, short Kiwi. So
You had a good night.
excuse me. I got limited out of the euro at 117.50. Obviously a little early. And then I took the dollar max off at 21.30 this morning, and the dollar Canadian at 32 like 48, so not too far from where we're at. And the Kiwi I was short at 67.15, closed that at 66.65, I think. So overall really great night. And the whole reason why yesterday shorted the euro was, when France announced that they might mull over some lockdowns, then, it's like, dude, you saw what happened to, US equities during a lockdown.
Yeah.
What do you think is going to happen to the Europe? And then GMT, let me see, at 8 p.m. Oh, no, I'm sorry, 5 p.m. I think Macron may be having a press conference. So we have to, listen up, because he hasn't announced, the month-long lockdown. There's just there was some, scuttlebutt about it. And that basically tore the euro down almost 100 pips from last night, from when the news came out. Then, the news came out at right here. No, right here. Where did I get short? I got short at, no, I guess it was right here. Yeah, it was right here yesterday evening. And it was like 118.15. So we've nearly dropped 100 pips at this point. So, but technically we've done a lot of damage here, Coach. And you look at the dollar, and the dollar is still, we're ripping, but the dollar is still confined within its range. But I think there's a lot of, technically the dollar looks a lot better than it did. So,
and your call for what you called a wedge yesterday in euro, that it implied a breakdown was an excellent call. Remember, you had like a flat line there. You called it a wedge.
Yeah. Yes.
Oh,
yes.
yeah. Okay. So the measured move, I don't think we're quite there yet off that formation, but that was great. Real nice identification of what could happen prior to it happening, Blake.
Yeah, we're thank you. We're close to, the initial target, which would be, right here around 117.20. So we're pretty close. Hold on one second, please. Yeah, so I think we're going there. I would assume we're going there, you know what I mean? So we'll see. It has, I think that, we're going to find out what the damage is in the euro here is shortly. But oh shoot, I didn't want to delete that. Did I? Was that it? Oh no, that's fine. But anyway, yeah, I think the euro, I just can't believe how far it's gone. I thought we were going to stop here at this intersection of these trend lines, which came in here. And that's why I put in my limit at 117.50, because I figured, okay, well, when we come onto these trend lines, we're gonna find some sort of support. But man, this thing has just been getting demolished, right? Yeah. So looks
good trade.
Well, thanks. I see.
You're never gonna like buy it and then it turns back in the other,
what's that?
It's tough to cover your shorts at the exact low before it bounces.
Oh yeah.
Aren't you happy with, say, taking half 50% and real happy taking 75% out of a move?
Yeah, but when you're sleeping, you can't.
Oh yeah.
I throw in orders just to, it's like, okay, well, if we get down here, I need to take it off, just in case. Yeah. So that's just kind of the way I trade, which doesn't make it right or wrong, but there are times where, things spike into my price, and I might have only taken off a piece, and then, you know, next thing you know, it's bounced all the way back up in my face, and I'm like, man, why didn't I take it all off there? So a lot of times it's like if I'm sleeping and I get up in the morning after an overnight session and I've, you know, made a good amount of money, it's like, okay, you know, that's good. You know, now let's reset and figure out what we're going to do from here. So anyway, that's my thoughts. But Steve's going to be out today, so I'm going to take my sweet ass time doing analysis with you guys today. And Stelios is here. It's a holiday in Greece, from what I understand, right, Stel? He's actually visiting with some friends right now. I was trying to.
Hello.
Hey, see, I thought you must have been in the other room. I know you're away. So what Greek holiday is it today?
It's Independence Day today.
How many times has Greece become independent?
Like 12, I think.
I was gonna say, I'm like, how many? You guys must have a lot of Independence Days. That's what I was thinking in my head.
Any excuse for a holiday, yeah.
Yeah. So, well, happy Independence Day. I know you've before I get into my analysis, I just wanted to see, you know, if there was anything that you wanted to say to the good people that are listening in right now.
Yeah,
about
sure.
the overnight session and what's been happening, and maybe some of these lockdowns that are looking to take place in Europe.
Yeah. I mean, the main thing overnight, as I think we all know, is the dollar has been spiking a little bit. Equities are falling, which is kind of what we were talking about yesterday. Remember, I was saying, I think going into the elections, there is a good risk of a dollar spike with all the associated moves. We are seeing in Europe, you know, COVID cases rising. There's, you know, Italy, Spain, France, even here, you know, talking about lockdowns. And I think it's something we can't ignore. I'm looking particularly at metals as well.
Yeah, you're not, you know, feeling as bad.
Yesterday, and we saw they're both gold and silver. And
yeah. Oh, you're just not feeling as bad not having a position in silver besides your physical. Yeah, so you see, you let it come to you. It's going to come to you.
Yes, I think so. And I think the problem is that everybody is now convinced that equities only go up, you know, dollar only goes down. I think that's why, one of the reasons why I think we're going to see a little bit more of a move going into the election, especially if it looks like it's going to be a contested election. So I stand firm by my prediction. I think silver will get to around 21, which is where I'm going to start getting long. I think gold 1800 should be relatively easy. I know I sounded like a moron when I was saying this a few weeks ago, but I think that's happening. And I think we still have lots of potential negatives that are not priced in, not yet, at least in equities and a risk in general. So you know, I do think this is going to happen. Will it happen before the elections, after the elections? I don't care really, but I'm waiting for the move so that I can get long again. Otherwise, I was actually this morning when the dollar was when equities were selling off. I was saying, look, guys, metals are not doing much. They're very resilient, and also commodity currencies like Norway, Aussie, Kiwi, they were almost flat. And I'm saying, look, this is weird. Theoretically, they should be catching up, and lo and behold, they're catching up now. So I think we have more. I think we have more room to go to the downside in dollar pairs. I don't know what you think, Blake, but I think we do.
Me too. You mean as far as the euro's got some more downside, et cetera, et cetera?
Yes.
Oh yeah, absolutely. I do. Now, you know, I
the
do
medium
get a little
term, I
skeptical.
think the dollar.
Go ahead.
Sorry, go on.
No, I was going to say I'm obviously a little skeptical about the sterling because of all the Brexit news that surrounds this pair. You know, but yeah, when you're talking about the Aussie and the Kiwi, I mean, you know, these currencies are approaching some pretty critical levels of support. You know, I think they are, and you know, the problem is if they start breaking, you know, we're going to see some real serious dollar squeezing.
I agree, and we saw that in March. And people underestimate how vicious it can be, and everybody's bearish the dollar. I agree. In the medium term, I think it's going lower. The dollar is going lower, but in the short term, we've seen how it can happen, and it can be vicious. So I'll be very careful about being long euro dollar. Or actually, of all the dollar pairs, I think cable is the one I would choose to be long, simply because, like you said, Brexit news are, I think they're very close to announcing something. So that's the one I would want to be long of. But I do think we could have a little bit more to go before the elections, or even straight after the elections.
Right, right. Okay, well, it's good to get your perspective. And you know, the thing is we've made quite a move this morning. So I think now if you are a dollar bull, you have to look tactfully where you want to be at this point. You know, I don't know if you really want to, you know, sell the euro right here at 117.29. Because, you know, the fact of the matter is we could probably bounce a little bit before, you know, the selling reasserts itself. So I think finding those levels today are going to be pretty important. It's going to be a little trickier now, in my opinion. I think that, you know, we're starting to see the heightened risk of, you know, possibly a contested election result. We've got the elections upcoming. If you look at the S&P, Stelios and Dale, we're moving lower. We're at the 618 retracement right now, but we're moving a little bit lower. I wouldn't be surprised if we bounce, you know, somewhere around here, because I don't think it's going to be a straight line down either. You know what I mean?
Yeah.
Yeah.
That rally yesterday to old support, new resistance at 34.25 is plus, you know, what gave me conviction that this break could be real was the VIX, you know, and it finally breaking out. So hard to want to be long anything equity wise with this going on. So you have like two gaps here, Blake. The gap into Monday and the gap from last night. That's look across your chart, you don't see many of those in the VIX. So I think there's a message here. Yeah, that's a breakout.
Yeah. So yeah, I couldn't agree more, but that doesn't mean we're going to go in a straight line either. So
No,
that's
it doesn't. It doesn't.
That's why you got to be a little careful here. All right. Well, Stelios, good to hear your thoughts. Just hang around on standby. I'm going to go ahead and start going through the charts and getting everybody's bias chart ready for today. So thanks for your input. Any other last words before we get into the analysis?
No.
When's your book coming out?
Hopefully before Christmas. More on that later. I'll be here. I'll be here listening. So
all right.
Okay.
Sounds
and
great.
I'm here.
Thanks,
I'm here, Blake. I'm
all
here
right.
to interrupt you, bro.
What's that?
I'm here to interrupt you.
Okay, cool. Great. Let's get into these charts. So let's delete a couple of things. Well, actually, you know what I'm going to do right now? I'm going to delete these trend lines for a moment. I'd like to actually look from a, you know, little bit longer term perspective, because we knew that the euro failed at the 618. So that's the given. So we can remove that. Let me just remove it. The 618 retracement here comes in at 117.14, which if you look at this previous support zone, resistance zone that we've had all drawn out through here, and actually this is it goes a little bit deeper than that. Okay, the top of that level, the top of that zone, which you can see that there's spike highs through here, lows. It's a big congestion area that comes in at 117.15. So I'm assuming we're going to find some support soon, guys, with the euro. Does that mean you should be buying at 117.15? No, but I think if you are short, you need to be a little cautious as we get down there, right? Resistance now. So now you have to imagine any rally back towards, you can see what happened right here at this spike. You can see on a 4-hour basis, this is a 4-hour chart, you can see the spike right into that support, and that held. That's that previous resistance. So that's going to be at 117.70. That I bet is going to be pretty decent resistance for today on any rally. Now, I'm still going to keep us in range. I know a lot of you guys are like, oh my gosh, it's so bearish. I mean, but is it? I mean, let's look since, okay, August. Let's just call it, you know, beginning of August. Is it really bearish? I mean, it is right now, but are we really in a, you know, really bearish trend? The answer to the question is no, I don't think so. And frankly, as you guys know, longer term, I'm really interested in buying the euro down here, the 115s. You know, will we ever get down there?
Yeah,
What's
I
that?
think so. I think we
Yeah,
could.
Yeah, I think we could. I mean, especially, you know, you start talking about European lockdowns, we got elections coming. I mean, there's a whole lot of reasons why we can get down there, but that's where I'm really interested on being.
Or the
on the long.
DSI might be, you know, down to 40 or so by then. You know, it's been hanging in the 70s with euro just going sideways. There's been an awful lot of bullishness.
Yeah.
So, you know, maybe by then we're, you know, 30 in the euro down there.
Yeah, I mean, it could be. Sure, I think the DSI has, you know, the ability to, for sure. You know what I'd like to do, because Macron is going to talk today. The lows right here at 116.90. I'm gonna write it down just in case he does announce a lockdown. Because we might spike down there, just in case you guys know that number. Let's talk about the cable. So we're at trendline support right now. And matter of fact, let's see here. We are at trendline support. 78% retracement comes in at 129.27. So I'm going to write down 129.25 just to round that out, because it is sterling. So it spikes around a little bit more than the average pair. So 29.25 resistance now is at, well, any move back up towards 130 should find some resistance. I would say maybe even a 130.10. Okay, still in a range. Let's go into the Aussie. So the Aussie, we had last night, strong CPI number. The Aussie spikes up in Asia to test the double top here. Then we get a double top break below 71, and here we go. We should, you know, be able to move all the way to 70. What is this? I'll say roughly 70.50. Okay, that's where we should find support. Now, remember, really key support is down here at 70.20. You know, I have to, it's 70 cents to 70.30 is what it is. But I'm going to write down 70.20 because, wow, this euro is just getting demolished. My goodness. The dollar is just ripping balls right now. We're getting close to that support though, so just keep in mind. What was I going to do? I was just talking about the
cable.
Yes. No, I was just talking about the Aussie. Sorry.
Oh yeah.
Huh. Look, you weren't even paying attention. You're just guessing.
No,
you were talking about the cable.
The cobwebs are so clear.
Yeah, right. So there's support right here, right there, 70.20. That's even though I know we can make it down to 70 cents. This is the support we need to watch. just in case. All right, let's go over to the Aussie or Kiwi, excuse me. So I shorted yesterday at 67.15, covered it this morning on this drop, and it's still trading really heavy. This is our chart of the day yesterday. You know, big head and shoulder pattern. So now any move back up towards 66.85. Should find sellers. Oh, shoot, I forgot resistance for the Aussie. Sorry about that. I thought I had, oh, it's 71 cents. Actually 71.05. So I just didn't type it out. Okay, so 66.85. Now, the question is, where's support in the Kiwi? Support in the Kiwi. Well, let's remove this because we don't need that now. So, because we already saw that 127% extension. That's what stopped us yesterday. So here's the 50% retracement that comes in at 66.38. The 618 is down here at 66.17. So I'm going to write down 66.15 is being support. Okay. Okay. Dollar CAD. So I was long dollar CAD yesterday, got out this morning a lot lower. When I say a lot lower, I got out like over here. It has just been ripping. I mean, like, look at this hourly. Look at the hourly candles here. You know, it's really hard to step in front of this right now, but I mean, you got to be a little cautious. Can we rally to 33.07? Sure. You know, I'll write it out. Whoops. 33. That's the 127% extension. It is, we are in a range. I would expect any dip back to 132.20 to offer support now.
Hey, Blake, I'm going to just step away, get a cup of coffee. Okay, bro? I'll be right back.
I'm going to get a drink of my coffee. Hold on. Yep. Okay. Let's go. Okay, where am I at? Let's go dollar Mexican peso. So I got out of the dollar mex here at 21.30 earlier. This is, and you notice how we're kind of stalling here. This is not an open invitation to short the dollar Mexican peso, by the way. Just because it's stalled over the last hour. I think if you're long, you have to be a little careful. I got out like right here, like right where we're at, basically, because this was channel resistance. And you guys know that 21.25, we'd been writing down that number specifically for a while, but we're coming up to that 21.50 resistance that we've been, you know, really hammering on, which is this previous support here. I'm actually going to write down this resistance. So let's just grab this 21.52, 21.53. That's going to be that I'm going to write down because I want to get a little bit more granular as we get closer to that. 21.50. Whoops. 53. That's going to be really, in my opinion, probably pretty important resistance here. Now, if we can get a dip in the dollar Mexican peso, you know, back down to 21, like this area. So if we, whoops. If we can get a dip back down to, you know, I mean, we might even find support ahead of 21. This maybe 21.08 to 21, I think would be really good support for longs. I'm just going to write down 21, but you could probably find support ahead of that. Because think about the risk reward from here. You know, and by the way, stocks are S&Ps are at lows on the session. If you get long the dollar Mexican peso, and let's just, take this 4-hour chart. This has been our risk reward the whole time, right? Your risk is down here. Your reward is somewhere up here. Okay. So if you enter, here, right, currently where we're at, we're still good. You're risking 1 to make 2, right? But if you enter here, you're risking 1 to make basically 4. So you can see how much more beneficial it is on dips back down towards 21. And that's why I'm going to say, hey, as long as we're above this 2085 and you feel that, stocks are going to continue to come down as we approach the election, and, people are getting nervous and no stimulus, blah, 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 then, buying the dollar Mexican peso down here at 21 makes a lot of sense if you can get it now. For those of you that are long and you're like, well, I'm long already. Well, maybe do what Dale says and you take a piece off, take a little bit of profit, move your stops, adjust them a little bit to protect yourself, and then, move forward from there.
I'm back, bro.
Okay.
Wasn't that the quickest? I went to Starbucks and I'm back.
Damn, man, you are fast. And that's what she said.
It's the caffeine, man.
Okay.
It's my coupe to the, the infinity.
Benedict, if you just heard me say that, that was for you, buddy. He you know what? Benedict hasn't been listening in most recently. He's one of the traders in our chat room that he's been in our chat rooms for
since he was a baby.
No, I want to say like maybe the last 7 or 8 years.
Yeah.
I've known him for a long time, but he trades derivatives for one of the banks, and it has become a little bit busier, probably because of COVID and some layoffs and blah blah blah. So he doesn't listen as quite as sometimes he's listening in, sometimes he's not. But anyway, I made that joke because we joke around like that. All right. So here's the dollar Swiss. I don't see why the dollar Swiss can't make it back to this 91.60 resistance that we remember. This 91.60 and 92 cents, how big that was a couple weeks back. Well, guess what? We're probably heading back up there. Dips now back to 90.90 should offer support. So I'm going to write that down. For those of you that are even trading the Swissy, and that's obviously not me because I don't have any desire to trade this pair currently. So
looks like it could form a massive head and shoulders top if it on this rally could be the right shoulder on the chart you just showed.
On the dollar Swiss?
Yeah.
Let's see here.
So your blue line's the neckline, and say we rally back to what's that, 92-ish?
Yeah.
But that's right. Yeah, you don't believe in them as being.
I don't like
head
and shoulder
formation.
continuation patterns.
Yeah, I forgot.
That's not my style. But
yeah.
Hey, that doesn't mean that it won't work. I try not to be the my way or the highway type of dude, but in that scenario, I won't trade it. So, like if you think that this is a let's do the squiggly line here. Yeah, if you think that shoulder, head, shoulder, and then it should continue. Yeah, that's not the way I trade. But that doesn't, like I said, that doesn't mean it won't work.
Yeah.
Holy cow, what the fudge sickle is happening here? The pound is just getting destroyed right now. Look at the pound.
Yeah.
I mean, it just took out a bunch of stops. Wow.
Yeah. EG's probably popping here pretty good.
What's that?
Euro pound's probably popping pretty good.
Yeah, I think the
Been a
Euro's
mess, but I'm still
pop up.
bullish.
It's still between the 90, 91.
Yeah.
So I don't know if I'd mess with it too much, but anyway, that's crazy. Dollar Canadian, look at that rip. All right. Let's go. Speaking of the dollar, let's go take a look at some of these other dollar pairs. Here's the dollar Swiss. Here's the US dollar Norwegian krona. 940 is going to come into play. So remember, we have been talking about this. And obviously, we got to look at dips back to, well, now intraday dips back to 930 is probably going to offer support.
And they keep pressing the S&Ps.
We are pressing lower. Yep. And you know what just went positive is the dollar yen. Now, you got to be careful with the dollar yen here. I think we're going to struggle right around these levels. We broke this triangle. So we should, now we hit new lows and then we, actually I tweeted it out because we were breaking down, but we should stop somewhere around here. I'm going to write down resistance as being 104, whatever the highs are, 104.55. And then support is going to be 104.10. This is the $1 pair that might be moving in a bearish fashion, but I'd like to see the daily close today before, giving it that designation. But anyway, that's kind of what I'm looking at with the dollar yen. I think the risk, the dollar yen is moving lower, especially with all these yen pairs. You look at the euro yen, and that's breaking down. Pound yen, Aussie yen, New Zealand yen. I mean, they're all just breaking down. Now the dollar yen's obviously getting a bid because, the dollar's got a bid. But how about if the dollar, pulls back? Then I think the dollar yen is going to be one of those currency pairs that really has a decent pullback. So just be careful with it. And matter of fact, let me be a little bit more specific with this dollar yen because .38% retracement does come in at 47, so we're getting pretty close to that. Okay. Where are we going next?
Charles North would like to know what was the main reason you went long MEX, because he said some of the fundamentals of Mexico are attracting buyers lately.
Risk reward. I mean, risk again, and that's a good question, but it's the risk reward and the backdrop of,
risk off.
I mean, the emerging market currencies still offer the most attractive yields for currencies. So when you have a stock market that starts to sell off, you're going to have traders and institutions selling their emerging market currencies like the peso, like the rand, the ZAR. Those currencies tend to get hit during periods of risk off that we're seeing. So, it was more of a hedge against what I assumed was happening in the S&P, which, we talked about, the last couple of days, is just, we're drifting lower in equities. And so, there's a good chance that we're going to be, moving lower, and that's going to keep pressure on the Mexican peso. Okay, hopefully that answered your question. Here's the dollar index. So let's take a look at the dollar index. So, as you guys, you might have missed some of my conversations yesterday with the daily roundup folks. That's why you can see this this blue box that we're in. I do believe the dollar index is, just kind of range bound, but that doesn't mean that we can't, continue to move higher today towards 94. And so 94 is going to be, you know, our resistance. I would expect any dip now down to probably actually here 93 and a quarter. And this will be 94. And we're still in a range. I know you guys are probably looking at, you know, some of these dollar pairs and going, man, isn't the dollar bullish? It is right now, but that doesn't mean that the, you know, we're out of a range. I mean, this range is probably going to be broken following the election. But today, you know, would be it's hard to be short dollars right now, right? Intraday. Let's take a look at gold. So gold is absolutely getting clobbered right now, Dale.
Yep, it broke down.
It is breaking down. Hold on 1 second. Hey, Stelios, are you listening in?
Hey, I'm here. Hi.
Hey, man, do you mind taking over the last like 5 to 7 minutes
Yeah,
of
sure.
the webinar? Okay,
Sure,
I'm
sure,
gonna
sure.
finish up with my analysis here, and then I gotta pass it over to you. I've got to deal with my dogs actually here.
Okay, okay.
Now it's starting to scratch at my door. So, but hold on, let me wrap up with the last two pairs. Okay.
Sure.
All right. So thanks, by the way. So here is gold. Let's get over to gold. And gold has broken that. Remember, we were writing down 1890. That was pretty important support intraday. And you can see as we cleared through that support, it's now, you know, cleared through that. Now, support intraday from here. Let's get rid of this. Hold on, dogs. The 78% retracement comes in at 118.66. Okay, and below that, the 88% retracement would be 1858. So I think that the next level support for gold is going to be 1866. Now we should expect rallies back towards 1890 to find sellers. Now, the one thing about gold is that we did break this channel, and that's kept me like more of defensive in gold and silver. You know, I just assumed we were going to break down eventually. You know, today's breakdowns just kind of, you know, came out of, you know, it's because the dollar was moving. But I would expect now, especially with gold, you'd find rallies like this should probably be sold into. Okay. Now let's go look at the S&P. As I explained to you guys with the S&P, the last couple of days is, you know, we probably have a descending channel, but now, you know, we're breaking through that channel. So it's a little, there's a lot of reasons why stocks are coming down. There's the election, there's, you know, no stimulus. But now one of the things that's really a concern is, you know, these lockdowns. Now, I think everybody in the United States believes that there is not going to be a lockdown here. But here's the thing. How about if Biden wins? Now, I personally, I'll tell you, I don't think we should lock down. I'm probably in the majority, I would think. But that doesn't mean that that's not going to happen under a different, you know, a Democratic president. If it was Donald Trump and he won, there's no way we're going into lockdown again. I mean, it's just not going to happen. he wouldn't let that happen. Personally, I think we are at risk of doing, having some stay-at-home orders going into the fall, especially if COVID continues to, ramsack.
Oh yeah,
not only the
Well,
United States, but
we'll have
the rest
that.
of the world. What's that?
We'll have some stay-at-home regional, different hotspot areas.
Yeah, and that kind of concern, Dale, I'm sure is starting to weigh on equities too. So it's just
Yeah.
it's adding
Everything.
fuel to it's adding fuel to the fire. So, but anyway, I think there are risks associated with the market here. Now, do I think that you should be shorting the market right now? Not necessarily, but I do think that we do. We're going to be trading heavier. So I would look now for rallies, back towards, if you can get back towards 3,400.
You think we're going to 32, Blake? That was like the bottom of your chart.
Yeah, I think we're going to probably like 30. Yeah, 30. Oh, we're already at 3,300. I thought we'd be at 3,300 before the election, but shoot, we might even be there today. So yeah, 3,200 might be realistic.
Yeah.
What I think we have to write down support for today would be right here at 3,302. So I think that's going to offer support. I'm not sure if we're going to make it all the way down there today, but 3,300 should offer support now. Okay. Am I bearish? No. I still think we're in a range, but you just have to be careful of all the strength that we're seeing here. Dollar, everything. So anyway, that's this is your bias chart for today. As much as I'd like to flip everything to, oh man, we've flipped bearish and yada yada yada. I just think the dollar is making a really big move, and you have to respect it today. Okay, that's going to be my 2 cents about that. So I'm going to pass it over to you, Dale, if you can take the screen, because I know Stelios is away from his computer.
I'm here.
Oh, do you have your computer too?
I'm on my laptop. Yes.
Oh, look at you.
So,
okay. Well, hey, I'm going to
to
pass it over to you. I appreciate you taking care of this. My dogs are getting extremely restless right now, and
go take care of
they ate early yesterday, so now they're starting to scratch at my door. This is like they're like little timers. They know exactly how long between meetings. It's crazy. All right, I'm going to go, but thanks, guys. Have a great one.
Blake.
See you guys.
Buddy.
Thank you, Blake. So
all right, Stels. So maybe we get back inside this trend line here.
Well, that's this has been my worry this is a weekly chart. So, this part here where we seem to be breaking down, we're not completely broken down yet. And if we do get back above, then that's going to be a false breakdown. And I think we could easily get towards 100 again. I know it sounds crazy. It sounds a little bit far-fetched, but you know how markets move. We've seen worse things happen. So I think DXY is the first chart that I look at when I wake up in the morning. And I really think that everything is kind of aligning for a short squeeze in the dollar.
At least maybe, what do you think, bro? At least maybe back to like that 200 week moving averages around 96.
Yeah, which is 96. Yeah, it could be possible. The question is, if that happens, I think we will see risk off, and we get to the situation where everybody's trying to get out at the same time through the same door. So a move. I don't think it's going to be a move like March, but it could be severe. There's no getting around that. So I'm really waiting to see how this is going to evolve, and really it's this week and next week that we're going to be watching. So this for me is the big picture in DXY. I still think we're going to be going a lot lower. I think we're going to get to if we do spike higher, it's going to be something like, let me get that. I personally think it's going to be something like, I don't know, this, and then, oops,
then down.
I lost it. Yeah, and then somewhere like, probably in the mid to high 80s. I think it's very doable.
I do too. Yeah.
But again, this is a weekly chart. This is not going to happen from one day to the next. But that is what I think is going to be happening, and I've been waiting for this move to get to start accumulating positions. One thing I really want to happen if the dollar is the dollar to strengthen, because I want to be selling more of dollar Norway. Look what happened here back in March. We all know that the Norwegian kroner gets really feisty when the dollar rallies. The Norwegian kroner was probably, if not the worst performing currency out of the ones that we look at. I think it was actually the worst performing currency, and it doesn't make sense to me. It doesn't make sense to me at all because of Norway, the way it's run as a country. It's very prudent. They have oil reserves. Obviously, they were also hurt by oil going negative. Because they're an oil producer, and I think 20% of the GDP is oil and gas. But still, it moves too much compared to how much it should be affected by all this. So I don't think we're going to get another spike towards 12, but anything close to 11, I'm going to be really starting to accumulate shorts. Same with Euro Norway. I still have one position in Euro Norway left. I took profits on the rest, but I always have one Euro Norway short, which I think eventually is going to go back to. I know it's not one of the ones that we cover at ForexAnalytix, but I do look at it. I think we're going back to 10 easily, but there probably will be a spike first. Now, S&Ps. Oops. S&Ps. This is something which I have been looking at for a while. I love this break and retesting. I always love it when something gets retested. So we had twice this thing here. We have an ascending, call it whatever you want, ascending wedge, whatever it is. But that broke. It got retested, and now we're falling. I really think that we have the legs to get to 3,000, even below. And people might think I'm mad, but I think there's a good chance it's going to happen. I am looking to get long eventually equities, both indices and individual stocks, but I'm not doing anything yet. I am actually around 90% in cash right now in my own portfolio.
Great look.
And then we looked at these before. Just another. I think it's probably worth showing one more time. I posted this a little while ago. We have this ascending channel in gold. It was broken, retested. See how many times it's being touched again, and now bam, we're gone. I think 1850 is the next support, and really we should be looking at 1800 for the proper level to get. At least I am to start accumulating longs. Could it go below? Of course it could. Anything can happen, but I think that would be a decent level. And the same with silver. This is what I had drawn. It took a little bit longer to happen, but this channel was broken, and I think really we're heading towards 21, 22. This is a zone where I'll be starting to accumulate. Again, could we get to 19? 19 had been a huge resistance zone for ages.
It was a breakout.
Yes, it was a breakout. So could we get back to 19? I think we could. I don't care if we do. If we do get to 21, I'm starting to accumulate. If we get to 19, I'll accumulate more. And I'm not advocating that people do what I do. If you've been listening to these webinars, if you've been a ForexAnalytix member, you'll know I had been long silver from around 15 for a couple of years. And during March, we went down to, 12.5. So I was down quite a bit on it, but I have very high conviction on this trade. So I had no problem just sticking with it. And I didn't catch the highs, but I got out at an average around 24.5, 20, somewhere between 24 and 25. So that was a good run, even though I had to wait nearly 2 years for it. Again, this goes back to trading the way that it suits you and not copying what other people do. I have friends who are day traders or who trade much shorter time frames. They say, how can you stick with a position so long? I can't do it. Well, I can't do the opposite. So it's a matter of preference. And one last one I want to look at.
You're a macro man.
I'm a macro. Yeah, exactly.
Yeah.
And
I see it, Dave.
Last one I want to show is oil. This zone here I've been watching for quite a while. And people, again, who have been listening to what I say, I've always said that, look, anything below $25, $30, it just cannot stay there for long, simply because of simple supply and demand. You get down, okay, ignore negative numbers. Those were just plays on futures. But if we get oil at $20, what happens? You see rig counts going to, not to zero, but dropping substantially. US oil rig counts went down from, what was it, an average of 800, they went down to 150 within weeks in March. So that naturally stops production, and that is an automatic stabilizer. Now, on the other hand, when you get up to $70 or $80, producers just hedge all their the future flows. So that's going to be a natural resistance. So you saw here we hit 70-ish, and then we went straight back down. But I've been saying for weeks, look, the way we went back to 40-ish, how the momentum just stalled. I think that was very telling. And I was saying, look, if you've been long, take profits. I don't think this is the place to be long. I'm not saying necessarily shorted, but if you have been long, that's a great place to just take profits and get out. And look, now we're kind of dragging lower. If we break these levels at, what is it, 36-ish, then I think we're going towards 30 again. It will all depend on COVID and the global situation. So we have to be very careful. I'm not doing anything until the elections, that's for sure.
Great wrap up here, buddy.
Thank you, Dale. Thank you. I hope it's helpful. Right. It's just my opinion, as always.
Everything you said, I concur with. So that might make you a little nervous that we agree, but thank you. Why don't you get back to your holiday and enjoy? And I'll take over the screen. Dave is with us from Moneyology. So, Dave, I'm going to get you set up and looking forward to seeing what you're seeing. And should be coming up here. Okay. What happened to you? You were
I'm here.
Oh, Dave. Okay. How are you, buddy?
I'm good, Dale. How you guys doing?
Oh, okay. So we have a lot of red ink, strong dollar, weak everything else. Do you remember how to share your screen, Dave? That's that screen. There you go. Welcome back, bro.
Thank you very much. Well, I really appreciate you taking the time to let me back on. It's been a couple months and a lot has changed at the same time. Not much movement in a lot of areas that we've been looking at together. A lot of range bound action.
Okay. Huh? So you look at it's an interesting little map with everything you look at. Any reason that you kind of have this set up for watching everything?
You know what? I've always liked this visualization. It allows me to look at a lot of different areas very, very efficiently. So this is one of your panelists mentioned that he looks at the US dollar every morning. Well, this is what I look at every morning, just to see what's taking place, kind of temperature check on the markets.
Okay, it's like your heat map.
Exactly right.
Okay, so what are you thinking here? Handful of days out before the election, S&Ps have finally, VIX is broken out. That's the way it looks to me, and you have it like number one on your one-day relative performance here. What are your views, and what do you have conviction about? And if you don't, that's fine too. What are you thinking here, Dave?
Sure. Well, the one point of conviction that I do have is that there is going to be a lot more volatility over the next couple of weeks. During my weekend review this past week, it looked like the charts were setting up for an upside breakout. And when I say upside breakout, I was referring to the equity markets in the treasuries. And that all did not occur. So whomever was set up for that upside breakout was clearly on the wrong side of the trade. We didn't have strong conviction one way or the other. So we were just looking at it from a overall general perspective. And so bottom line is this reversal here forces us to reassess, and we'll be looking at the charts specifically this weekend just to see where they are from a weekly perspective. Those of you unfamiliar with my approach, I use weekly charts as a primary, and obviously we do other timeframes, monthly, daily, etc. And we are swing traders. We invest. I enjoy investing in long-term companies, long-term investments based upon long-term trends in the market. So when we last spoke, I spoke about gold and silver, copper, and uranium as really my three areas of focus. And
right.
Frankly, they've largely been range bound. There have been some stocks that have done incredibly well, others not as much. But bottom line is, as we look at the markets, as I look at the markets today, I think given today's price action, It doesn't surprise me, and here's why. We had multiple tops here. First on the S&P at 33.93, then 35.88, with consecutive negative divergence here at the top, with RSI creating lower highs, and so whereas I thought this third attempt would break out of this downtrend, it clearly didn't occur. So now I'm looking at the S&P as a potential retest of the 3,300 area, possibly slice through that all the way to 3,200 as we get through some of the uncertainties that you guys already
How about your lower channel line?
That's a possibility. That is a possibility. I just you have to be humble in this business. So I'm not looking out that far at this point, but it is very much possible given some of the potential volatility that we have in store. Contested election, coronavirus expanding.
That'd
perhaps,
be about what, 15% correction from the highs.
Right.
Yeah, that that would set up some real nice buying opportunities. I'm telling people, get your shopping list out, wait for a 15% correction. I don't care what it is. I think that everything's so binary, but maybe you're looking at cannabis issues, or you're looking at tech, but it was too expensive. I think we're going to get this pullback and then blast again to over 4,000 S&Ps. But
I agree with you. I think a melt up is likely going to occur at some point, but it's likely going to come on the heels of a very strong stimulus, which, as government, they're not going to do anything until their back's against the wall.
Yeah, well, I think 2,900 would be motivation.
Oh yeah, for sure.
S&Ps. Sure. I mean, sometimes were you around during 2008 during that financial crisis? Okay, so you remember when they first brought TARP to the floor and it didn't pass,
right?
And the market tanked. We went to 666 S&Ps. The next day it passed.
Yep.
So we only act when we're in the middle of a crisis, and not preemptively, usually after the fact. So I was thinking it was going to take some type of sell-off in equities to get people in Congress to go to work.
Yeah.
So okay.
When I've been looking at the VIX over the past couple of months here, it looked to me like it was setting up kind of an ugly bullish flag here. And when I was looking at the momentum on the top right here, it was not only did we backtest that trend line, but we created multiple higher divergences. So even though right now the VIX is around 37 or so, according to this metric, momentum here, even as we closed last night at 33 and a quarter, was higher than it was when we were at 38, and higher than when it was when we were at 44. Told me that the markets needed to readjust their kind of volatility and their positioning. So this spike does not surprise me. The only thing that will surprise me is how far we go. Nobody knows ultimately, but we'll be watching very, very closely.
I know when I look at that, and it doesn't make sense to me, it looks like we could, that big bulge that you have at the top there is kind of it's confirmed. Yeah, it's a confirmed high. And, it almost makes me think we could go to 100, but I don't even want to think about that happening. But maybe just a measured move from that little triangle you have, 37 to 20, 54, maybe 50.
Yeah, around those
Something
levels
like
would not surprise me whatsoever.
Yeah. Okay. All right. So go ahead.
And as I go through the various other charts, we were talking about gold. Gold again was positioned. I saw some of the daily charts. I obviously look at those as well. There was that bearish flag that broke down this morning, and after in futures trading. But when you look at it from a longer term perspective, this is a bullish wedge that's being created. And although a breakout here was possible, certainly that's not what happened. So down we go. And so my personal target is around that 1825 level. I don't know if it's going to get there, but if it goes lower, that's where I expect to see some pretty strong support. Coincides with this 50 RSI level, which it's found support at multiple times. But gold, look, I looked through about 300 charts on a weekly basis in the precious metal sector, and there are some names that are really strong right now, and either they're ignoring this particular move down, or they're simply positioning themselves for what's going to happen once this move is over. Because I think most folks still believe gold's going much higher over the foreseeable future.
When you're doing your due diligence, looking at mining companies, do you really dig into the balance sheet with debt? Because a friend of mine really does a lot of work on mining shares, and he's very excited about a lot of issues that don't have real big float, because these guys are making money. I mean, their cost of production anywhere from 750 to 1200. So they're printing money now. They're way above production levels, as well as silver. So, I mean, for the first time in a long time, they're all making money, and it sure isn't going to take a lot of money flow. I think something like Apple could buy every miner out there, just Apple, every miner out there. So, do you have any miners? You said some of the names are holding up well. That today will be a good test to see how they act with gold down sharply. Any names that you'd want to share?
Sure. I mean, off the top of my head, the one comes to mind that's actually a producing miner is Alamos Gold, AGI.
Oh, okay, Alamos. All right.
There are that chart yesterday. I mean, we can pull it up here, but give me just a second here.
Ever hear of a company named Torex?
Oh yeah, Torex certainly has been on top of our watch list for quite some time. So when you look at Alamos in this particular daily chart, not only is it in a bullish flag here, but momentum back tested this breakout level, back tested the 38 level, and now was on the verge of a break above 50. Now we'll see what happens today. My guess is it's probably not going to be a positive day in this chart, but you want to look at the miners that are showing relative performance. I'm also looking at a lot of explorers in the silver space, because there are a lot of high grade explorers that aren't producing anything, but given the cash flow that a lot of these majors are going to be running with, I think they'll have the ability to buy out these miners at really nice valuations for investors. Reina Silver comes to mind. Arcana is another name that I've been looking at. There's a name in Argentina, Abra Plata. So there are some companies that I have been doing more and more due diligence on in the silver space. And the more conviction that I have, the more I'm willing to invest of personal capital. I wanted to point out one thing, and just in the interest of time, Dale. So we were talking about uranium, and rather than going into any particular charts, I will kind of share with you my three top kind of plays in that sector. But Uranium Participation Corp, which is kind of the way I track the price of uranium, even though this trades currently at about a 20 to 30% discount to the price of uranium, which in and of itself is a potential arbitrage opportunity. But Uranium Participation Corp, when you look at this chart, it's at a confluence of support here, and we are finding support at that 38 RSI level, which happens to be the breakout level from the March lows. And so when I look at this chart here, this could be a turning point potentially. As you look at the MACDs are starting to turn, and if uranium finds support at these levels and breaks out of this range, this could be a really interesting place to look at the uranium miners. I mean, there's seasonality that's very bullish in Q4, typically for uranium, and so long as the general equity markets just don't completely melt down, and obviously we looked at that earlier, it's a possibility. But I looked at a relative chart of uranium against the S&P, and we're looking at a breakout right now similar to what we saw in March. So is it gonna happen? Anybody's guess, but if it does, this is where I expect it to occur, and there are some really nice long-term opportunities.
Okay. Would you say that you're more bullish uranium than gold? I mean, that point I made about it wouldn't take a lot of money flow into all the gold miners to make them fly. If you look at all the market cap of all the gold miners, it's, compared to things like mega caps that we have, it's nothing. And I think the expression is like, just a water coming out of a hose would blow up the gold and silver miners, and it would only take water out of a straw to blow up the uranium sector, because it's that much more infinitesimal than the precious metals.
Yeah, I absolutely think that uranium, when you look at the supply and demand fundamentals in the uranium space and relative to where they've been and what the needs are for all the nuclear reactors coming up all around the globe, I think uranium is not even in the first inning, whereas gold may very well be in the third or fourth or fifth inning at this point. Obviously, I think gold is going much higher longer term, but uranium right now, with the exception of Kazatomprom, I don't think there's one uranium miner that's profitable at spot price $29.50. So if uranium is going to be if nuclear energy is going to be a fuel source for the future, uranium will have to be anywhere between $60 and $90. And right now, obviously, it's a fraction of that. So if uranium does start moving up toward 50, you're going to see 5, 10x, even some 20x returns in some of these smaller miners. Obviously, the downside is if it doesn't happen, there's just constant dilution, and that's just part of the game.
Yeah, they're always doing another secondary to that's there. When you have a public company, it's kind of like the Fed. Your stock is like the Fed's dollar. You just print them. You just put out more shares and dilute. I was going to ask you about this. The uranium. Okay, uranium with the election coming up. Is there one candidate? Could this be part of kind of like a green revolution? I mean, besides an accident, it's pretty clean. Do you think that if Biden gets elected, he'll embrace it? Has President Trump embraced it? What do you think can be the future for the U.S. trying to move away from carbon fuels? Do you think it's going to be nuclear?
Yeah, absolutely. I really do. I think both parties will embrace it. They're going to embrace it a little bit differently. I think when you're looking at the Republicans, their embrace will be more free market, and they'll allow for perhaps more simple permitting of lands and access to less red tape to get things into production, whereas the Democrats will probably bring in more capital towards more technology and certainly more awareness to the sector through their Green New Deal policies. So either way, right now it's in a good spot. When you look globally, whether it's China, India, Brazil, Europe, I mean, every day you see stories of new reactors coming on board, and with almost no companies to provide or produce them in the uranium. It's a once in a lifetime opportunity. I wish I had the point at which this is going to break, but when it does, it's going to be really exciting. So when I look at my portfolio, when I look at the stocks that I like to own, companies that I want to own, I don't want to own companies right now that have debt. I don't want to own companies that have years to production and debt. Everything will go up, but I look at the explorers right now first and foremost. The top name that comes to mind for me is Encore Energy. You have Appia Energy is up in Canada in the Athabasca. They are a rare earth as well as a uranium play, and they just have top-notch management. And another name that really is interesting to me is Forum Energy. Those three names, I just feel like they're in a really good spot. Forum Energy is a copper, palladium, kind of nickel deposit. some very nice uranium properties as well. I'd rather sit on those companies that don't have much dilution and that are just willing to wait things out versus companies that have massive amounts of capital outflows. And,
All right, these aren't pink sheet or bulletin board companies, are they?
They are. I mean,
Okay.
they're on the Canadian exchange. They're all kind of in the micro cap space between
Okay.
20 and $60 million. I mean, look, if you're gonna buy into the space, Cameco is the way to go. The large cap name in the sector. They're gonna do incredibly well, but obviously won't have the same return profile as some of the smaller names.
Where are most of the uranium mines located? Are they in most of them in Canada? Any here in the U.S.? Because you know, sometimes if you're in precious metal miners, you know, all of a sudden something will happen in a country. You know, they'll stop producing because of COVID. You know, a fear of nationalization of mines in certain countries. Do you kind of have a filter for where you feel comfortable investing based upon where the mines are located geographically?
Yeah. Well, there are really three major spots of three major jurisdictions for uranium right now. The Athabasca region being number one. You have southwestern United States, kind of the Arizona, Wyoming, Utah channel over there, New Mexico and Texas, and then Africa. You have Niger is an interesting spot, Nambia. So each of these jurisdictions presents different risks and reward. I think what's very unique about Africa is you have very low cost miners there, junior miners that may be the fastest to production when or if the cycle turns, and they're going to be the primary buyout candidates by Russia and China and so on. And so you might see a major rush into those areas when the cycle turns.
Anything in Mambia?
Yeah, so there's, I don't, off the top of my head, I don't remember which jurisdiction is which, but Global Atomic is probably the best fundamentally positioned company out in Africa. There's Deep Yellow is another name that has been on the top of my radar, and one that we own quite a bit of, in addition to Global Atomic, is Goviex. That's a name backed by the same Friedland family and Denison Mines. So they're just some really interesting players out there, and with substantial.
Yeah, it's interesting you brought up Africa, Dave, because Shy Girl, I don't know if you know her, Tracy Schuchart, she's an oil analyst, and she was bringing up Africa. It's almost like it seems like Africa is really kind of like the new frontier for all of these minerals, oil, etc. That you know, all these resources that have just been kind of dormant for a long time. That this could be perhaps Africa's way out of poverty with the resources if the governments handle it well.
I would certainly hope for their sake that's the case. But you hit the nail on the head. The governments, every single one of these regimes is different. I will say, I believe it's with in the case of Nambia, most of their high-paying jobs are from the engineers that operate a lot of these mines, and some of these mines are coming off of production. So they're incentivized in every way to bring new mines into production. And frankly, with the price of uranium where it is right now, they're just not going to come to production at these levels. So at some point, the rubber's going to have to hit the road, and we'll see what happens.
Okay, you want to show? Do you have a website that you know, where you share these ideas, or is it mainly on Twitter for people that? Oh, there we go.
I do have a website, except this is taking me to the back end here. We don't want that. Yeah, so it's moneyology.com, and basically what I try to do is I try to create 1 to 2 publicly available videos and then I also do premium videos that go into more specific stocks. I update, for example, in precious metals, I do about 30 to 40 stocks on a weekly basis, just to update the stop losses, the potential targets, etc. And I'm starting to do some education. A lot of folks have been asking for more basic education, so I'm starting to do a couple of these lessons in technical analysis. And so as you see here, we cover solar, we cover primarily we've been covering uranium, precious metals, and copper of late, because that's where there's been a very interesting opportunities. But you know, we go through the various different sectors that we see momentum coming into, or potentially as contrarian technical plays where there's some very interesting risk reward. So
yeah, I think you buy these, if I'm right about it, 15% correction. There may be pressure on everything.
Yep.
And maybe that's going to be the window. And you know, there aren't a lot of guys out there covering uranium, Dave. So you know, it's a service. And I could see it. I mean, when you talk about that it's embryonic, after all these years, we've, you know, had nuclear reactors, and now, you know, the consciousness about carbon. I think it's, you know, timely. Your time is coming. And what I'd like to say to you, my trading warrior brothers, everyone who's listening to us now, that if you're not in the know, and you want to have a glow, go see Dave at moneyology.com for some background and resources on the uranium market.
Yeah, absolutely. Thank you so much, Dale. And again, the best way to contact me is either at dave@moneyology.com or at Twitter. Just ping me, and I'm very active there. So happy to chat with anybody.
Okay, Dave, you know, I wish you a great holiday season, and that you know, that your portfolio in the next couple years blows up like a mushroom cloud.
Thank you so much, Dale. I really appreciate it. Thank you for the time, and
yeah,
stay safe and stay healthy, and all the best to you and your family.
Okay, thank you so much. That's Dave from Moneyology, a great resource for miners and uranium. And that's going to be a wrap for us, everyone. Remember, don't just count your pips, count your blessings. You know, I'm here to bring in people to give you guys some ideas, but besides scalping the euro, right? So check it out. And let's see, today is Wednesday. Okay, see everyone tomorrow. Okay, I have the pup of Wall Street with us tomorrow. So looking forward, that's going to be his first interview with us. Don't just count your pips, count your blessings, and have a great day, everyone. Thank you. See you, Tom. You're welcome, everyone. You're welcome, Laura, Monica. See ya. You too, Grant. Take it easy.